Hello and welcome back to the channel. In this edition, we'll be reviewing International Gemological Institute India Limited. The IPO forward is on in the market. There are a lot of IPOs happening as we speak on the date of recording, which is the 13th of December, Friday the 13th. But one IPO which really caught my attention was the International Gemological Institute India Limited, just because of the sheer dominance that the company operates in and the reasonable valuations that it would be going for. So it would be going for a valuation of close to 51 to 52 price to earnings. And although a lot of people might call it expensive, I look at it as a reasonable valuation for a few reasons. For the sheer reason that the operating profit margins and the bottom line that this company is generating sits in the range of 70% post pre the IPO, and once the IPO is completed, it will be sitting at the range of 50%. So to be really be writing a business of close to 700 CR, for example, I'll go into the exact numbers of the IPO as we go along the IPO note, and be generating a profit of 350 crore is quite impressive. It is one of the largest rating rating business of diamonds and studded jewelries all across the globe. It holds 50% market share. It is Blackstone backed, and these were some of the reasons I began to look at this. But in this edition, we'll be looking at the timeline of the IPO, what the price band is, what would be the market cap of the IPO, what is the issue dates, the issue breakup. So this is not just an IPO to the public, but this is also an offer for sale. So the way it's broken is 1475 is the IPO issue, and 2750 crore is the offer for sale. Then we'll also be looking at the financial details of the business, the objective of the issue, the background of where the proceeds will be utilized, the business overview, the key service offerings, and pre and post, what will be the holding structure of the company to give light as to whether this would be a hold after it does get subscribed, or once it gets listed onto the market as well, you can come in early or you shouldn't come in early. So this is just an objective, factual thing that I'm going to lay out, and then you can make a call on your own. In terms of the the current GMP as at the time of recording is close to 24% from the issue price. So people who are looking to book listing gains can move accordingly. So here we'll dive right into the business and we'll look at the issue highlights. So as we can see within the issue details, that 1475 crore is the fresh issue of equity shares aggregating up to 1475 crore, and offer for sale of equity shares aggregating up to 2750 crore. So if you look at the holding structure currently, so the holding structure is such that pre-offer the holding structure is 100% with the promoter of the company, and post for the offer, it'll be 76.55% with the promoter and 23.45% with the public. So that will include all your retail investor, institutional investors, and the likes. So here, when we look at what the issue size is, so the total issue size is close to 4,225 crore. The face value that the stock will list at is rupees 2. The price band will be in the range of 397 to 417. And it would come in the bid lot of 35 shares. So for a retail investor, it would be in the 14,000 to 15,000 range. Post issue, the market cap will be sitting at 18,000 crore of market cap. So people who look to invest in lower market cap companies can make the call according to the implied market cap that there is. So the issue opens as of the date of recording, which is the 13th of December, and the issue closes on Tuesday. It will go for trading on the 20th of December. So that is how it is set up. For the retail investors, 10% would be available out of the total 4,225 crore, and for the QIB, it'll be close to 75%. NIB will be 15%. So this company essentially is the largest independent certification and accreditation services provider in terms of the number of certification of diamonds, studded jewelry, and colored stones. It holds 50% market share in the same for 2023. It is one of the three players that offers a full stack of comprehensive offerings among the peer set, covering grading and classification services across different stone types. In India, IGI India is the first international laboratory for diamonds, studded jewelry, and colored stone certification. It was also the first to provide certification accreditation services among its global peers in 1999. So here we'll look at the brief financial details. So as we can see that the reserves as at September 30, 2024, sits at close to 564 crore, which is up from 449 crore a year back. And the revenue growth has been in the range of 31.42%. So high growth business, and also a lot of changes are happening in terms of the grading as well. So the grading is also now being carried out for lab grown diamonds, and that also forms a significant chunk of its uh, business that it does. So here we see that the EBITDA margin is sitting close to 71.9%, 70.81%, and the net profit margin is sitting in the range of 54.67%. So here, as we spoke about the shareholding percentage, the promoters currently hold 100%, but post-issue, the will hold 76.55%, and the public will hold 23.45%. So now we'll dive into, yeah. So what is the objective of the issue? What is the purpose? Why is the company coming out with the issue? And what do they want from the issue? So the main thing that the company wants is to change the holding structure of the company. So currently the company is divided into, we'll just quickly have a look at the holding structure pre, and then we'll look at the holding structure post. So the promoter of the company is BCP Asia 2, top company PTE Limited, which holds 100% of IGI. Now, IGI is divided into different segments all across the globe: IGI India, IGI Netherlands, and IGI Belgium. What IGI India wants to do is, through the proceeds, wants to buy out the stake of IGI Netherlands and IGI Belgium. So this is the existing holding structure of the global IGI business. And what it is proposing is a post-acquisition group. BCP Asia will hold IGI India, which it will hold 76%, as we saw. So 23% will be out in the open market. And IGI India will control IGI Netherlands, IGI Belgium, and IGI Turkey. And within then, IGI Netherlands controls a bunch of countries like IGI UAE, Israel, Thailand, and Hong Kong. And IGI Belgium controls IGI USA. So this is the holding structure change that the company wants. It wants to make a dominant footprint onto the global market, and hence wants to change the holding structure. So here, as we can see within the IPO note as well, IGI India and its subsidiary operates as part of the proposed restructuring. IGI India proposes to utilize a portion of the net proceeds towards acquiring 100% of the share capital of IGI Belgium and IGI Netherlands from the promoter. Following the completion of such acquisition, India will become the 100% shareholder of IGI Belgium and IGI Netherlands, and will be responsible for operation of the IGI business globally. So because of the dominance that India also has in the cutting and polishing, so Surat accounting for close to 90% of the cutting and polishing happening all across the globe. So it makes sense that once the cutting and polishing happens, all the grading and everything also remains with India. So in this sense, 100% shareholding of the IGI group will be with India post the IPO proceeds are with them. So in terms of the key service offering that the company does, the company is into comprehensive diamond grading, including issuing reports for the 4 Cs: the cut, color, clarity, and carat weight of natural laboratory grown diamonds, along with additional information such as fluorescence and symmetry. They also provide screening and sorting services if required by the customers. They help in evaluating the quality and authenticity of colored stones, including rubies, sapphires, emeralds, and other precious and semi-precious stones, and issuing grading reports detailing the characteristics. Um, Grading and assessment of finished jewelry pieces, including assessing the quality of diamonds, colored stone craftsmanship, such as mounting and symmetry, and overall value. Um, so here we can see the revenue segment wise. As of current year, calendar year 2023, 45.97% or 46% of the revenue came from lab grown diamond certification. Close to 19% came from national diamond certification. 32% of the calendar year 23 revenue was from jewelry, color stone, and other certification. And 3.88% came from educational and seminars that the company holds to increase awareness. So, and it charges on the basis of, so close to 4% of the revenue is coming from educational and others. So pretty diversified in the sense that the breakup of the group's revenue is diversified in that sense. So here we can see a important bit of information that IGI India also served 9 out of the top 10 jewelry chains in India by revenue for FY 2024. Um, that is a big thing to happen. So that shows the dominance of the company that it has over the jewelry business. And jewelry business, as we know it, is at the nascent stage, and a lot of associated shift is happening between organized and disorganized jewelry. Earlier, people used to go to people used to go to the family jewelers, and there was not a grading or hallmark, or there was no standardization earlier. But now there is BIS hallmark, and a lot of the market is shifting from from the disorganized family jeweler to a more organized chain like Kalyan Jewelers and Titan, PM Gargill and Senco Gold and those kind of brands which are already listed. So, given the trend that is happening, and given that India is going to also issue a lot of standardization that needs to happen in what the grading of jewelry is, this looks like a promising opportunity. Um, Either to pick it up during the IPO or even to pick it up after that. Once, if there is a price correction on the downward side, then one can look at the price to earnings and take a call on what the current standing of the business is and can look at picking it out. I think one of the downside that I did see was that there was a lot of client concentration risk. So this is not mentioned in the IPO note. Do let me know in the comment section if you have come across any points where you do come across a client concentration risk, or you can provide any additional information on that. So for this review, we will let that one pass. But that is one important factor to look at while evaluating whether you do want to enter the company. Yeah. So in terms of the market opportunity that there is increasing awareness among consumers. So certification and these things are going to become increasingly important, and the percentage of market which is not covered by that will need to be covered by that. And there's a lot of mandate that is flowing in, and companies like these would stand to benefit because of the dominant market that they have. And in terms of the barrier to entry, do also let me know in the comment section what do you think about the barrier to entry, and if you had to invert and think that what were some of the reasons that could cause the downfall of such a robust company. Would love to know that. And it would be interesting to think on those terms. Right now, obviously, my assessment is very initial. It is very, I did hear about the company while flipping through the newspapers, and it's just a um, initial assessment that I've made. Although it might be pointed towards the positive side, but obviously once you do hold, you get to know a lot more information on, or even before you hold, you can go keep going deeper and deeper and finding more about the company. So right now my perspective is positive on this, but my perspective is can change depending on the light of new information that I do come across. I would want to feed my opinion with some of the things that could destroy its barriers, and I would love to know some of the things that could destroy its barrier to entry, because the company is making supernormal profits, and this is the nature of capitalism, that once you're making supernormal profits, people would want to enter that market and try and destroy your moat of the business, or the barrier of entry into the business, and your supernormal profits and your margins would start coming down, and there will be a lot of competition within the market. Currently, I don't see that. It is a rarity within the IPO space, because a lot of IPOs that I do come across, Vishal Mega Mart and those kind of things, they have a lot of competition built in, and they so Vishal is going into an IPO. DMart, if I had to pick one brick and mortar store for retail stores, I would pick DMart. But even DMart is undergoing a lot of challenge from quick commerce. But my personal opinion is that given that they hold the property, and given that how robust Walmart has performed within the US, although the times were different, and that time quick commerce was not a big segment. But I think both can coexist, quick commerce and brick and mortar stores, and both can continue to do well, in my opinion. So we are talking about this organized jewelry retail certification of smaller diamonds, jewelry's position as an asset, although I disagree with that because there are a lot of making charges and a lot of associated loss that happens while making the jewelry and putting it out into the locker. Then you pay locker charges as well. So those kind of things are there, and I don't look at it as an asset, or I look at it as a very inferior asset, to be honest. Okay, that's it from my side in this edition. Do let me know what you think of the analysis, any other IPO you want me to look at. Hope you have a lovely day ahead and a lovely week and a lovely year ahead. Thank you and goodbye.